The International Monetary Fund warns against too much government spending and supports higher interest rates in Australia. The development of a hydrogen energy sector in Australia takes a hit, and get ready for more ads on your streaming service. Welcome to Fear and Greed Daily Business News. For people who make their own decisions, it is Friday, the 4th of October 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, the International Monetary Fund has warned that government spending could keep interest rates higher than they otherwise would be, and has told the federal government to target future cost of living relief.
The IMF, in its annual health check of the Australian economy, called for an overhaul of the tax system, suggesting the government phase out superannuation tax concessions and capital gains tax discounts to fund a reduction in personal income and company tax rates. The IMF said there was a case to reevaluate tax concessions paid to property investors, that's a hot button topic here, as part of a broader package designed to address Australia's chronic housing shortage. It said 2 federal budget surpluses in a row was good news. However, the budget for this financial year had a positive fiscal impulse. In English.
Yeah, what's that mean?
Adding to demand and inflationary pressures. The comment about targeting cost of living relief is significant. Plenty of the government policies, like the energy rebates, go to everyone, not just the people who really need it. Given the likelihood of more household subsidies ahead of the next election, it will be interesting to see if Treasurer Jim Chalmers is listening to the IMF. The IMF endorsed the Reserve Bank's restrictive policy stance, but warned that interest rates would need to rise if progress on lowering inflation stopped, potentially due to stronger than expected government spending or global supply chain disruptions. It endorsed what the Reserve Bank is doing on interest rates, basically.
We're very pragmatic here on Fear and Greed.
We are.
We're realists. So I've got to ask, is any of this actually going to happen?
Oh, God, no. No. I mean, a complete overhaul of the tax system? Buckley's chance.
Okay.
Even if it is a good idea. What's important here, the IMF can sit outside Australia and look in without having to deal with the politics of the situation or its recommendations, and give us its view, a fairly independent view, of how we could fix the system. And the gist of its tax argument is that the system is too reliant on direct taxation of individuals and companies. They should be wound back, as should tax relief in areas like negative gearing. So when we talk about negative gearing and all the debate going on in Canberra at the moment, and capital gains tax concessions, the flip side is, if that was done, the savings made there should help finance tax cuts, personal income tax cuts to the company tax rates. I reckon that's a pretty good idea, personally. The good news is that the IMF expects inflation to return sustainably to the Reserve Bank's target range of 2 to 3% by the end of next year, though the unknowns are house prices. I mean, if they keep rising, people could think they're richer than they are and keep spending. Government spending is problematic as well, and supply chain disruptions are always a threat.
Sean, before we get to local markets, a quick mention of the interview that you have coming up after the show. You're speaking with Nicola Powell from Domain.
Sure am. We talk all about Domain's rent report. It's quarterly, which came out this week, and really it's good news for renters. I think that's the bottom line to it. Great chat with Nicola.
Yeah, indeed. Definitely worth a listen. It's coming up after the show. Back to local markets. What happened yesterday?
The S&P ASX 200 closed up just a touch, 7 points. I suppose we can say that's flat. Finished at 8,205 points. Shares in commercial property groups did best, following an upbeat assessment from investment bank Barrenjoey. In fact, the REIT index was up more than 1%. Not a lot of activity going on, particularly compared to previous weeks. The banks were mixed, so too the retailers and miners. Westpac said it would make more than $1 billion in proceeds from the sale of its auto finance loan book, or what's left of its auto finance loan book, to Resimac Group. Westpac's share price fell 1% yesterday. Sigma Healthcare keeps running, up 7% yesterday. It's now up about 40% over the past few days. That's when it gave undertakings to the Australian Competition and Consumer Commission about its deal to merge with Chemist Warehouse. There was also a note out from Goldman Sachs suggesting that investors switch from Guzman y Gomez shares to Collins Foods, which is the owner of KFC. That pushed the share price of Collins up more than 2%. Guzman was down 5%. Guzman's share price, quite amazing. It's actually more than double its listing share price on June 20. Quite phenomenal. It's gone from $22 to about $47, $48 Quite amazing.
Pretty incredible story, that one. Now, checking international markets thanks to Blue Chip Communication, the experts helping financial services companies market, communicate, and grow. Visit bluechipcommunication.com.au. A lot of attention on oil at the moment, Sean.
Yes, prices rose for a third day as traders assess what's going on in the Middle East and what it means for crude supply. The region accounts for about 1/3 of global supply, and traders are worried that the latest escalation could hit flows if energy facilities are attacked or supply routes blocked. Gold is slightly lower, and the Aussie dollar is trading around 68.6 US cents. On Wall Street, OpenAI, the startup behind ChatGPT, is now worth 157 billion US dollars. Now, that's based on a capital raise it did over the past couple of days. It's quite remarkable. This is a company no one knew about a couple of years ago. It's now on par in terms of value with household names like Goldman Sachs, Uber, and AT&T. Earlier in the year, when employees sold shares, it was valued at $86 billion, now up to $157 billion US dollars. The funding round is one of the largest ever for a private company, apart from OpenAI's $10 billion raise from Microsoft in January last year. New investors in the latest one include Tokyo-based conglomerate SoftBank. It's putting in about $500 million US. AI chipmaker NVIDIA is also investing about $100 million US dollars.
And Sean, I've got to ask you, there is plenty going on in the world of rice at the moment. And you have been doing a bit of a deep dive into rice.
Yeah, so prices tumbled the most in more than 16 years in recent days. Basically, concerns over supply, as in a lack of supply, eased after India relaxed some export restrictions. Thai white rice 5%. Michael, one of your faves measures at the moment. Thai white rice 5%.
Is that actually the name of?
Yeah, it's an Asian benchmark.
Ah,
yeah, the Thai white rice 5%. Not bad.
Okay.
In fact, it might be broken. I think it's actually Thai white rice 5% broken. It plunged 11% yesterday to $509 a tonne, US dollars a tonne. That's the biggest decline since data was first compiled back in May 2008. It extends a prolonged slide in prices to the lowest level in more than 15 months, according to Bloomberg. Rice rallied last year after India implemented restrictions to contain prices ahead of elections. India, which is the world's biggest exporter, has now loosened some of those restrictions. Australia exports about $200 million of rice. We rank 18th in terms of rice exporters. Our number one destination, Michael, have a guess.
Somewhere nearby. I'm assuming. I say that with such confidence, but I'm assuming it would be relatively close.
Israel, believe it or not.
Well, that's about as far away as you can possibly get, right?
Yeah, I don't know why Israel, but it is. There you go.
Thai rice 5 broken. Now it just sounds like I'm putting words together. Thailand 5% broken rice.
No, Thai white rice 5% broken.
Surely the marketing department needs to pay a bit of attention to that. That can definitely be jazzed up a little bit, right?
Yeah, TWR 5% B.
You know what? I think that's not much of an improvement.
No, true.
No,
True.
It really doesn't roll off the tongue yet. I'll take that as my homework, Sean. I'll come up with something better for us. In the meantime, we'll take a quick break. We'll be back in a moment with the rest of the day's business news. Sean, the development of a sustainable, cost-effective hydrogen industry took a major step backwards yesterday after Origin Energy said it'll exit its existing hydro ventures.
They are too expensive, Origin said, and the Electricity and Gas Group said it won't go ahead with its Hunter Valley Hydrogen Hub, which was in line to get funding from the federal government. Chief Executive Frank Calabria told the Fin Review that it was clear that the hydrogen market was developing more slowly than anticipated, and there remains risks in terms of costs and tech advances. Now, a couple of months ago, Fortescue dropped plans for green hydrogen production as well. The Albanese government has committed to a $2 a kilogram subsidy for hydrogen producers under its Hydrogen Head Start program, along with about $6.7 billion in production tax credits. But there is now a shrinking list of operators who might be able to benefit from those handouts. That segment of the renewable energy market is struggling big time.
Sean, as the crisis in the Middle East worsens, and we'll have more on that story later, pro-Palestine organisers in Sydney have dumped plans to hold an assembly to mark the 1-year anniversary of the Hamas invasion of Israel.
That's right. Now, earlier in the day, New South Wales Premier Chris Minns said any protest shows no sympathy for the fact that this was a terrible terrorist incident in Israel and there are people who are grieving, and he called it distasteful at best. He had made an application to stop the protest ahead of the organisers pulling the plug. Meanwhile, opposition leader Peter Dutton has accused Victorian Premier Jacinta Allen of hiding behind an argument of convenience for not moving to block planned anti-Israel protests in Melbourne on the 7th.
And the federal government is working hard to get Australians out of Lebanon.
Around 1,700 Australian citizens, permanent residents and immediate family members had registered to leave Lebanon. Foreign Affairs Minister Penny Wong said the government had secured 580 seats on flights out of the country in coming days. She said the Australian government has RAAF aircraft in Cyprus as a contingency.
Sean, one of our favourite companies, I say favourite because we've spoken to the boss of SPC a few times, but the canned food group is heading back to the ASX with a reverse takeover of Original Juice Co.
Yeah, Original Juice Co. Do you drink orange juice?
A little bit, yes. Yes, I dabble.
I would dabble too. I'm not a big orange juice fan, except for Original Juice Co.
I like a bit of pulp, don't you?
Including pulp. Absolutely, including pulp. Yep.
Yeah, I never trust people who don't like pulp.
No. My daughter insists on the pulp free.
Oh dear.
And it's been an issue between us, but I think we're working through it.
It makes for a very frosty breakfast. You guys don't speak until lunchtime.
SPC was established more than 100 years ago as a farmer cooperative in Victoria, eventually listed on the ASX. Then it delisted in 2005 after being bought by Coca-Cola Amateur for about $750 million. A private equity group then bought the business back from Coca-Cola, that was in 2019, for just $40 million. Now, SPC will merge with Original Juice Co. It's a small ASX-listed stock. It's got a valuation of about $53 million. The combined group will spend $50 million to acquire Nature One Dairy's infant formula and powdered milk business. Combined annual revenues for all the businesses should be in the $400 million range. The main brands in the SPC business are SPC, Ardmona, Goulburn Valley and Pro Vital. The Original Juice Co. is the third largest orange juice producer in the country.
The Namoi Cotton Louis Dreyfus takeover saga, Sean, which we thought had ended on Wednesday, continues.
Yes, I did say maybe. I said...
Yeah, I remember you were very, very careful to qualify it.
Yes.
You are usually quite okay with being definitive on these things, but this one you were still hedging your bets.
It just keeps giving. And this next bit had nothing to do with Namoi or Louis Dreyfus. So the ASX was forced to scrap hundreds of thousands of dollars in trades in Namoi Cotton. These are the trades that allowed Louis Dreyfus to get over 50%. So they were scrapped after the ASX failed to publish an updated takeover offer from bidder Louis Dreyfus ahead of trading. The information should have been published by the ASX ahead of the opening on Tuesday. It was definitely relevant information. It said that Louis Dreyfus had upped its takeover offer to 77 cents a share for Namoi. It had the support of a major shareholder. That's pretty relevant, pretty material, but for some unknown reason, well, the ASX said it was a processing error. The announcement didn't make the exchange. It wasn't published. Between 10:06 and 10:12 on Tuesday morning, shares were traded below 77 cents a share. Now, the revised offer was for 77 cents a share. In the end, it probably doesn't make much difference. Louis Dreyfus got Namoi Cotton. There's not a huge difference between 77 cents and 76.5. But if you've got, thousands or hundreds of thousands or millions of shares, you'd be worried about that. And what if this deal was much bigger? Anyway.
Can we say it's officially done now, though?
I'm going to go with it. I'm going to say yeah. I reckon this was just like an asterisk at the end of it.
Yeah. What do they call it? A footnote.
A footnote.
Yeah.
Yeah, maybe.
It's officially done. Fear and Greed has given it the official stamp of approval. It's finished. Turning to international news now, Sean, and we did mention the situation in the Middle East earlier. Israel bombed central Beirut yesterday, killing at least 6 people. after its forces suffered their deadliest day on the Lebanese front in a year of clashes against Iran-backed Hezbollah.
Israel said it conducted a precise airstrike on Beirut, according to Reuters. A security source said Israel targeted a building in central Beirut's Bekora neighbourhood, close to Parliament. The nearest Israeli strikes have come to Lebanon's capital. At least 6 people were killed and 7 wounded, Lebanese health officials said. 3 missiles also hit the southern suburb of Daya, where Hezbollah leader Hassan Nasrallah was killed last week. Meanwhile, the US and its Western allies are trying to limit Israel's response to Iran's ballistic missile attacks 3 days ago. Washington has made it clear it supports Israel's right to respond militarily to the attack and is holding frequent calls with Israeli officials, but US officials also concede their influence on Israel is limited.
Sean, Tesla announced a jump in quarterly vehicle sales for the 3 months to the end of September, though it seems the rise wasn't enough to keep investors happy.
No, investors were hoping for more of a jump in sales. In China, overall, nearly 463,000 Teslas were sold during the quarter, up 6% from a year earlier. Tesla's share price fell 3.5% by the close, having earlier dropped more than 6%. Basically, China's government doubled an incentive for consumers to trade in older cars for electric vehicles. That was supposed to boost Tesla sales. Also, there's been plenty of excitement around self-driving prototypes due to be released shortly. That was supposed to add to sales as well. Basically, in the end, they helped, but not enough, according to investors.
And finally, Amazon is set to roll out a greater number of advertisements across its blockbuster TV shows and movies on Prime Video next year as it pushes further into ad-funded streaming services.
So the company said it hadn't seen a sharp drop in subscribers since it introduced advertising to its Prime Video platform 8 months ago, allaying fears among top executives of a customer backlash. Amazon's joined a highly competitive market for ad-supported streaming services. Most rival platforms, think Netflix, Max, Paramount Plus, Disney Plus, have brought in ad-supported tiers at a lower price than subscriptions that carry no ads at all, according to the Financial Times. Amazon said it had a global ad reach of about 200 million, the average monthly potential viewers of ad-supported Prime Video, with more than half in the US. Why has it got so many? Because Amazon did something a bit different to the rest. The group automatically flipped its more than 200 million total global subscribers to its ad-supported service, unless they actively chose to pay more for premium ad-free services. Kind of good. People had to opt out rather than opt in.
All right, up next is the Fear and Greed Daily Interview. Your guest today is Dr. Nicola Powell from Domain.
All about what's happening in the rental market. Great one for anyone renting, great one for investors who are investing in property, and a great one for anyone who owns a home, because you'll learn something about, well, what you possibly could get for your home.
Indeed. It is coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And keep an eye on your playlist, because at midday today, the newest episode of Ask Fear and Greed, our bonus podcast, only goes for about 5 or 6 or 7 minutes. Unless it's today's question, where, I mean, obviously we take listener questions and you answer them. Typically it's you answering them, Sean, because they're often questions about the economy or they're about business, and you've got a lot more experience in these particular spaces. But anyway, Bill asks a question today, and I have never seen you so excited to ask a question, to answer a question.
What about productivity? Productivity is, what makes the world go round. Certainly the economics world go round. You want higher standards of living? Productivity is your answer.
Oh, God, I've started you off again, haven't we? It's, if you want to see Sean very, very excited, then check out Ask Fear and Greed at midday. And if you want to get him excited yourself, then send in your own question. Anything you want to know about the economy or business or anything, really. I think he's got a fairly low threshold for excitement, so you can pretty much ask anything and he'll just go off like a frog in a sock. Send it on through via LinkedIn, Facebook, Instagram, fearandgreed.com.au, any of the above. Thank you, Sean.
Thank you, Michael.
It's Friday, the 4th of October, 2024. Make sure you are following the podcast and join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.